GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to the weekly webinar. So, really good week for gold last week, and we're pushing into the 200-day moving average as we kick off the new week. So that's very exciting for gold bulls, although there is some big resistance right in the area we currently stand. Interestingly, that negative RSI divergence that I talked about for the last couple of weeks actually played out quite neatly last week with 3 big down days, but we bounced back pretty big time across Thursday and Friday. So now we're in a bit of a halfway point now for the stock markets. Does it roll over again, or do we just push on again to record highs? Also, a choppy week for the pound, but we've held on to the key 140 level, so that's very interesting. As far as forex markets go, euro and yen a little bit less certain, but there is an interesting candlestick pattern potentially setting up in dollar yen, which I'll talk about in just a moment. So let's have a look at this euro dollar chart. So familiar situation here where we've broken, or we're trying to at least break away from this consolidation, this long period of consolidation that's basically taken place this year. Wasn't so happy with this because if you remember last week, we were basically looking for the price to continue pushing out to new highs above this previous peak, basically to make higher highs and higher lows, what you'd expect from an uptrend. But basically you can see better on the 4-hour chart that we rallied up and we pretty much stalled, tried it again, stalled again, and we tipped over. But we did eventually find support pretty much at that broken trend line, and we rallied back up. So I think the market still looks constructive. This line not so helpful, I think. If we can actually, for a second time, push above this 121.50 level, basically, to me that seems pretty bullish, and it seems like we're heading towards 122 and beyond. Assuming that we can basically do what we failed to do last time, which is push above this previous peak. It's natural to have pullbacks, and actually for anyone who was waiting for a pullback and bought at the trend line, ended up being a very neat little trade with a nice bounce on Friday last week. Stalling a bit under this line, I think for those looking to get it into the trade a little bit later on the bullish side, we're just looking for a break through this previous peak proper this time, rather than the failure that we experienced last time. If we do roll over again, then obviously that's something a bit like a head and shoulders pattern, a peak, a higher peak, a drop, and then a lower peak again. So that wouldn't obviously be such a good development. It's possible that we are just going through a choppy phase. We had a really good good start, a really good couple of weeks basically through April, and just as of May we've turned sideways. So that could just be that we're still in a kind of sideways moment, and maybe we do need to come down, test the 200-day moving average again in this kind of choppy sideways moment before we can take a direction. For the moment, my leaning is bullish. So moving on to the pound, where I think things are a little bit more clear-cut. You can see this is the key 140 resistance. We've broken out, come back, tested the level, and rebounded. So that's all pretty classic technical analysis that we like to see. We've basically put in this rounded bottom, broke out to the top side, and to me this is suggestive that we move up to test the highs, and I would say presumably push out to new highs. It was a big weekly reversal, but we did correct from 142-ish down to 137, so we did correct 500 pips pretty neatly, and now seemingly the correction is done. Wasn't such a steep one. We basically held on to this rising trend line that's been in place almost since the lows last year, and pushing higher. So I think the only worry short term with the pound would be if in fact we just roll over back under 140 again, which is entirely possible. Let me just bring that chart back up. It's entirely possible. And then I think there would be another second opportunity potentially at this rising trend line. probably closer to 139. So it wouldn't be game over if we failed at 140. It's entirely feasible. But it would certainly be more bullish if we just charged up from here and took out the high. Moving on to dollar yen. As I said, it's actually a very choppy market and not too much directional bias to take from here. We obviously had a massive start to the year, a really strong dollar. Then we had a period of dollar weakness, and we bounced back off those lows. But it's a bit like, well, which is it? Is it the real strong start to the year, or is it the more recent weakness? Which is the more powerful force in the market at the moment? It's not really certain, and that's hence you can see that the last week's price action was pretty much we dropped down to the support, rallied off the support in the space of almost 24 hours. We just went straight from support to resistance and then rolled over from there. Well, what is interesting is that potentially, depending on how today looks, it's definitely if it finished roughly the way it is, certainly another down, if it's another down day with not a particularly extreme lower body, then this would actually be a falling two methods bullish pattern where you had the big bullish candle and then three steady bearish candles. And then what's expected is to see another bullish pattern like that push out through to the top side. So that would be kind of interesting if we did have another pattern the size of this one, which would necessarily have to take place Tuesday. Then that would take us through 110 and be quite a bullish development. But so let's see how this is Monday's candle. We have to wait for that to close, and then we're looking to see what happens on Tuesday to see if we actually get that bullish follow through. Apart from that, very hard to take a directional bias. It's almost a similar thing. We do need to move through the support or the resistance to get a flavour of what's happening here. Moving on to the Aussie, still interesting. Good bounce off the confluence of support and the rising trend line here that provided a neat little short-term trade over a space of a couple of days. The question is, how much further does it go? We failed that there was resistance around 0.78 a few times now. This latest bullish breakout, particularly disappointing. Because again, we thought that we had this, as a reminder, we had the head and shoulders pattern, but we broke away from it, and then we broke through through the shoulder again, but then we dropped back down. But we held on to the trend line, so the uptrend is tentatively in place. And a bit like the euro, we didn't get that immediate bullish move. We had a correction because of those shock US inflation figures, basically. So I think probably the way we can read this is that there was surprisingly high US inflation, but overall the dollar has been weakening because the Fed has just been insistent that any inflation that we see is transitory. It's not going to last very long, and so they're just keeping interest rates low anyway, whereas some other central banks, including the Bank of England even, have turned just slightly more hawkish, just sort of suggesting they don't need the emergency stimulus anymore, and so that's good for their currencies relative to the dollar, where the Fed's just staying pat. So if we sort of look at it like there was a sudden bout of dollar strength after that data where everyone thought, what on earth? But then the Fed holds strong, and we've got Fed minutes this week, which will be interesting. Then there was just a little brief period of dollar strength that caused these kind of false breakouts, but then we can resume business as normal and push higher with more dollar weakness if we continue just to assume that this inflation is going to be ignored by the Fed. So I think that's the fundamental story. If we break lower and there's more dollar strength, then we have to kind of reassess that story, and that could be centered around the Fed minutes this week, if they sound a bit surprisingly hawkish, which seems unlikely. All right, so done with forex now. Let's move on to the metals, and this is some of the more interesting places of the market now. So you can see I've left the 200-day moving average on the chart. And if I zoom out a bit, you can see that it has been fairly useful in terms of determining the trend. We've had these kind of brief dips through and rallied up through, brief dips, and then period of consolidation, retest, drop. If you remember, we talked about the death cross, where the 50-day moving average fell below the 200-day moving average. That is still the case for the moment. The price obviously leads, but then the moving averages follow. So if we do have some sustained period above, with price above the 200-day moving average, naturally the 50-day moving average, which I haven't drawn on here, we don't need to, will catch up, and that would be a bullish confirmation. For now, it's just early days, and we actually, right in this area, we've got this previous peak, we've got 1850, the 200-day moving average, and the declining trend line. But the reason I feel slightly better about the situation is I think actually the markets kind of foresaw all that resistance, and we had this little correction before we even got there. So there was the peak, there's the trend line, etc. But we actually kind of dipped here. So now we've broken above that area. We've made this little breakout here. We haven't, let's zoom in a bit. We haven't closed Monday yet, so we may fail, tick back under this high and fail at the 200-day moving average, and that would be a bit of a bearish sign depending on how much of a reversal we get. If we do close above the previous peak and close above the 200-day moving average, maybe even Monday gets more bullish and we close above the declining trend line, that would all be good bullish news. Then I think just the remaining hurdle is, if I zoom out again, you'll see there's a confluence of resistance from these two previous peaks. It's around 1880, and it's also the 50% retracement of this entire drop that we've experienced since gold's record high 9 months or so ago. So that's the last hurdle, I think. We're pushing through 1850. We've got the 200-day and the declining trend line, and then above that we've got this confluence of Fibo and previous peak resistance. So this whole zone, you could argue, is pretty critical for gold, and it would not be surprising, even if you're kind of bullish on the market, to see another dip from this area. But as I say, we've already had one, so that's kind of good that we've just had that one, and we're still pushing up. Slightly different emphasis on, have I just gone straight to gold again? Let's have a look at silver here. Just concentrating on the short-term action a little bit more. You can see that we dipped down, we formed a resistance here, we broke above it, and we've come back and we've basically tested it in quite a kind of bullish move where we haven't even got back to the previous resistance turn support, and we haven't even made it down to this rising trend line, no matter how you draw it. We pretty much still haven't even touched it. So that's, these last few days look quite bullish for silver, and it's basically continuing this pattern of higher highs and higher lows. These two big lines that you can see above, I've basically drawn it through the closes. So once we make a higher weekly close, it'll be the highest close for silver, in multiple years, whatever it was it 11 years? Our price action doesn't go about that far. And then the next step is just the actual intraday, intra-week peaks, which is just around that 30 level. So that's what we're potentially dealing with here. We stalled a bit last week, but we held above the rising trend line, we held above the resistance. Naturally, it seems to me we're probably going to test these weekly highs, then the multi-year intra-week highs. Okay, moving on to the oil market. Very interesting scenario here. This is our weekly chart again, and it's we've been looking at the same thing for a while now, but here we really are in the critical area. We've been holding on to this rising trend line through all these through the course of all these lows, and we've made a matching We've held on to this rising trend line, and we've made two matching highs here, just under the 67 mark and just below that previous peak. So it's interesting. We're really into a tight corner here, around basically just all clustered around 65. It's not sure which way the market will go, but there's certainly an interesting opportunity should we roll over from 67, because it's such strong resistance. If we roll over from 67, particularly if we got a drop through this rising trend line and under 65, I think we could interpret that as being pretty bearish. But if you actually look at these last 2 weeks, the price action was, the range was almost identical. Pretty interesting. So I think whichever way we break, whether it's past these lows or past these peaks, the breakout one way or the next, and whether that breakout actually holds, that will be the determinant of where we go next for oil, and potentially over the course of the next few. That will determine where we go for oil, potentially over the next few weeks even. Now, I mentioned at the start of the webinar that we actually had this, it's interesting, whenever I say, oh, it's probably not going to work, but let's have a look at it anyway, that's when it does work. So we had 3 big down days, but then we had a nice bounce at the end of the week. So then the question, as I say, is do we roll over again, or is this little correction over? And it certainly could be. There's a lot of liquidity from central banks still in the market, and the size of this correction is kind of roughly in keeping with what we've seen before. On this occasion, we had like another little leg down, so that would probably take us, if we had something like this and then this again, it would take us down to about 4,000, which would be kind of interesting. That seems possible, but it's still not a disaster scenario. If it is like a bigger move lower, then I thought there was an interesting confluence. I'll get rid of this little line, but this rising trend line and the previous low down here would provide an interesting confluence of support. We've got a 200-day moving average, which interestingly is just coming up to where we would be break even on the year, which I've kept on the chart here because I think that's a gauge for a lot of people whether the S&P 500 stays positive for 2021 in any correction. So that's a kind of a bit far away at this point, around 3,750. Given that we're up 400 points away from there, but that's the situation. And then more generally, you can see there's just a kind of rising wedge pattern. So maybe we've touched the upper end of this rising wedge a few too many times, and now we need to touch the bottom end, and then obviously markets need to make a decision whether they actually make some serious break lower or not. So what do we conclude here? For the time being, the market is still in a bullish trend. We've had a dip. People have already bought into the dip. Now it's probably too high to be buying. And if anything, what I think could be interesting here is just looking at the round numbers. Do we get another successful push through 4,200? That's probably bullish, and we just keep going higher. Do we not even get to 4,200 and drop below 4,100 again? Or do we drop to 4,100 and hold it and start to move higher? I think just this 100-point range could be pretty interesting for where we actually go next in the index, and I'll be watching those two levels, whether there's any reversals there or breakouts from those two levels to determine whether this pullback gets deeper or whether we just continue the record run. Last but certainly not least, Bitcoin. My chart actually looks a bit busier than I normally like, but let's maybe get rid of some of this. But you can see there's been various levels that have been at work. We're sort of potentially looking at a head and shoulders pattern here, a kind of a messy one, but left shoulder, head, right shoulder, and obviously we're right down at potentially what would be a neckline here. You can see that we first, in terms of this rally that we've had this year, we first pulled back 50%. We rallied up to the 60,000 level, failed at 60,000, and we've had this big drop more recently, exacerbated by Elon Musk and his tweets, etc. There was more of those tweets over the weekend, potentially implying that Tesla will drop its holdings of Bitcoin, maybe rotate it into Dogecoin, who knows. But more specifically on the chart, we've come off the lows. We're still hovering around that 45,000 mark, which is pretty critical as potentially a neckline of the head and shoulders pattern. And then you can see that I mentioned the first drop was to the 50% Fibo, where this latest drop has stored pretty neatly around the 61.8% Fibo, and almost to the, almost perfectly this previous peak. So in terms of a kind of dip buying area, that was obviously a pretty neat one. And we're still just on the waiting for the day to close here. So if you're waiting for a daily candlestick confirmation of this support, potentially you're still in with the trade here. And there's a lot of room to go back up to 65,000. But all that said, you've got to say the market has certainly turned a bit more two directional, not quite as bullish as it was. And, there's certainly a chance that we see more weakness here. It'd be interesting to see how Monday closes and how people react to that. But there you have it. You have a couple of areas of support, but you also have potentially a bearish pattern breaking lower. Right, thank you very much, everybody. Thanks for attending the webinar today. If there's any extra charts you want us to cover, please drop a comment in the video, or if you have any comments whatsoever, please drop a comment, or just click that like button. That really helps, and as does subscribing to the channel. That way, at least, you can always make sure you're available to watch these videos as soon as they come out. Thank you again, everyone. Good luck this week.